Hey, James, there's lots of news out of Fiserv this week.
Okay.
First, the company announced a collaboration with early warning services
Okay.
um, that will allow it to support ISOs and agents selling this. What is it called? Paze. It's a digital wallet that Fiserv. Besides being huge in the merchant services business. Before it got into that, its business was providing back end support for financial institutions.
Yeah, for banks. Got it. Yep.
Right, banks, community banks, and credit unions. So now it's going to offer this pays, which is early warning has created a new digital wallet
And
called
early what
Pays.
I'm still a little confused on that. Early warning of what?
Early warning services. It's a company that's owned by all the big banks.
Oh, okay, okay. So there's a company called Early Warning Services or a product
Right.
or something. And what does it
Okay.
do?
It does uh fraud and risk reduction, risk identification, fraud reduction. It's
Okay.
sort of like a fraud engine. It's owned by all the biggest banks, B of A, Chase, Wells,
So
all the
basically
guys that own RTP also own
okay, so the big
early
banks are
warning.
basically all pooling their resources and their data to be able to predict fraud and things like that. And
You
they
got
have
it.
okay, I got it.
You
Okay,
got
all
it.
right. Now I know what we're
So
talking about.
so
Okay.
so early warning is the company that operates Zelle.
Got it. Oh, really? So I knew that the banks all kind of had this vested interest in Zelle, but I didn't realize so that's part of the same entity. So
So
they all
that's how
collectively
they have the
own.
vested interest in it. Yes.
Oh, so interesting. Okay, well then it seems like Zelle should be better at managing fraud. But anyway,
You would think so, right?
right?
Um, but so now they're doing this thing called Paze, Paze,
Okay.
which they're going to market to, um, you know, Fiserv's financial institution clients so that they can have their own, the First National Bank of Erie can have its own digital wallet,
Mm,
branded itself. Which, I'm not
interesting.
sure there's that big of a need for that, but I think,
Hmm.
the fact that you have Fiserv, which is huge, and you have early warning, which has the corner on fraud prevention and risk analysis,
Right.
tells me that, there must be some kind of demand for that out there.
Yeah, I would think. Very interesting.
So,
Okay. Yeah.
okay, and
Well, I'll
then
be interested to see how that goes.
it also announced, Fiserv has also announced plans to launch a new digital asset platform along with a stablecoin, fi-USD.
Okay.
It's using the asset infrastructure from Paxos and Circle Internet Group, which are both active in the stablecoin world in terms of issuing and managing tokens, that represent the money behind stablecoins.
Mhm.
Fiserv also announced that it is partnering with PayPal to build future interoperability between fi-USD and PayPal's stablecoin py-USD.
Okay.
And just almost immediate. It's like these announcements are coming one day after another. Boom, boom, boom.
Right.
And the latest is a partnership with Mastercard to explore ways to integrate FIUSD across Mastercard's products and services.
Hmm.
Stablecoins got a big shot in the arm when the Senate passed the Genius Act. That's
Yes. Yes.
Of course, it still has to get through the House and before it can be signed
Right.
into law. But
It
the
looks
betting
likely.
is the betting is that it's gonna become law.
Right.
And a lot of the reporting I've seen in the Wall Street Journal just had an article, I think, this week about are stable coins going to make Mastercard and Visa obsolete,
Hmm.
or at least dig into their duopoly.
Right.
And so I think that's a really, to me, this MasterCard deal with Fiserv is really big because
Yeah.
it's going to give it a leg up on
Mhm.
Visa, at least for
Well,
the time
well,
being.
and I think both Visa and MasterCard have made it clear that, maybe a simplified way of putting it is I think that Visa and MasterCard want to become the gateway for
Right.
crypto acceptance, if
Yes,
that makes
I think
sense.
so.
I,
It
I'm
makes perfect sense. Yes.
it almost feels to me like when you see the deals that Visa is doing and the deals that MasterCard is doing, it's almost like they are understanding the importance of being not just the rails, but also the gateway
Right.
to allow businesses and to accept and allow consumers to spend using crypto.
Right.
And so it's a very interesting long-term bet on their part. I think it's the right strategic move. I personally, and it's funny, we're gonna have you introduced me to a guy I had a long conversation with yesterday about
Oh, you
Bitcoin.
didn't have him. Great. Glad you guys got together.
Yeah, but we're going to do a podcast episode coming up soon, and we'll talk about that. And so it's interesting because I think long term, it's still a bet, right? It's like we don't know for sure. Is it going to be stablecoin? Is it going to be Bitcoin? Is it going to be a combination? Is it going to be
Right.
mainstream? But I think it's the right bet because it's if it goes right for if stablecoin takes off or whatever, it is a big threat to Visa and Mastercard, and so it seems like it's something they should be playing. It's somewhere they should be
Definitely
playing.
something they need to be playing.
Yeah,
A, a sandbox they should be playing in,
there you go. That
so
was the
to
analogy
speak.
I was looking for there. Thank you.
Right. Um, but yeah, I'm interested. That guy I interviewed him for a story I did for the Green Sheet, and
Yeah, yeah.
he's really on top of this.
Yes. Yeah. Very
The only
interesting
ISO I
conversation.
know that's dealing in crypto.
Right.
So anyway, so that's the
So
big
that's
deal.
story number one,
That's
right?
story number one. Number
Yeah, we got two
two,
more.
yeah, two more. Payments is rampant. We all know that, right? I mean, FTC, the Federal Trade Commission reports that non-card payments fraud rose 271% between 2020 and 2024.
Right.
And the Treasury Department reports that suspicious activity reports, that go through the Financial Crimes Enforcement Network.
Right.
So, suspicious activity reports related to check, ACH, and wire fraud rose nearly 500% in the 10 years in 10
Wow.
years between 2014 and 2024. So it's rampant. So it's across all systems. Most notable, though, it should be said that the rise in check fraud is really spiraling out of control, which is really interesting considering the, continued uptick in digital payments. But I
Right.
think that, what they're saying is that because there's fewer checks, it's easier to, you know, pass that along. Like, you know, um,
People aren't as prepared to identify the fraud because they're not seeing it as much.
right, exactly. And
Mm.
people like the people are going to mailboxes and oh, this looks like a check. We'll take this one out, and
Right.
then
Right.
they change the amount and cash it,
Right.
and then I'm like, James, where's that check you sent me? you
Right.
know.
Right. Yeah.
So
Interesting.
anyway, so here's the thing. Regulators have issued the major financial institution regulators have issued a request for information on fraud. What what are some collaborative and independent steps regulators could take to help
Mm.
mitigate fraud for the financial institutions they regulate? It came out of the Federal Reserve banks, as well as the Federal Reserve Board, the Federal Deposit Insurance Corporation, and the Office of the Comptroller of the Currency.
Mm.
They posed 22 questions that they want people to answer to give them a sense for what they could be doing to help FIs staunch the spread of fraud,
Yeah.
which
Yeah.
I think is very interesting.
Mm.
I've been covering payments for a long time. I've never heard of, outside of FinCEN and suspicious activity reports, I've
Hmm.
never seen regulators say, "Hey, let us help you combat fraud,"
Right.
and they're in a perfect
Right.
position to
Which is
do
what they
that,
should be doing. But yeah, that's
which
great.
is really what they should be doing. But it's not something they really
Yeah. It's
have
not
been doing.
common.
They've been
Mm. Okay.
saying, they've been going through financial institutions' books,
Right.
during examination processes, and saying, "Hey, you have your fraud numbers are up. You need to be, go to
Right. They're
early
they're pointing
warning
the finger, but
services
they're
or
not
something."
they're not collaborating and partnering. And so now they're
Exactly.
potentially doing that. So great.
So
Well,
that's
that's
a
good
big
news.
deal that they want to
Yeah.
collaborate with financial institutions.
Okay. All right. That's story number two. What's our
And
third one?
number three, the is out of the Strawhecker Group.
Uh-huh.
As we've noted in the podcast numerous times for the last several years, the point of sale is no longer just a transaction tool.
Mm-hmm.
It's where data and customer experience converge to shape the future of business management.
Right.
You know, so with that in mind, the Strawhecker Group just released their 2025 directory of POS providers. And here are some key findings that I thought would be interesting to
Yeah.
share with folks.
Sure.
41% of those identified as POS providers offer an all in one solution or comprehensive POS solution such as Clover or Toast.
Sure. Right.
12%, this surprised me, 12% market their platforms as processor agnostic.
Mm-hmm. What percentage was that again?
12.
Yeah, that's crazy. Because I mean, like 5 years ago, I think that number would have been 80%, probably
Yeah,
at
I
least
know.
70.
Yeah,
So that's
right? I
that's a
mean,
trend in and of itself, right there.
right there. I thought that was a
Mm-hmm.
really interesting trend. I
And I, and
mean,
I, and it's like we need to pause that for a second because like our audience needs to hear that number again.
let's hear that. I'll give it to
It's
you again. 12% of POS providers market their platforms as processor agnostic.
And so for those agents and ISOs that are like, well, we're okay. We don't need to make integrated payment partnerships because we're going to continue to use processor agnostic solutions. Well, in the last 5 years, and I would love to know what the number was 5 years ago, but I would, if I had to guess, I would say it went from 60, 70% to 12%. So the
Yeah,
question, and it's like, well, why did that happen? Well, the reason that happened is because half of all the POS providers woke up one day and said, what the heck am I doing giving away all my payments margin? And they
right,
decided to do the payments themselves or do a partnership with a company providing distribution or whatever it was. They decided to make payments a core part of their platform. They also realized that the customer experience was suffering because they weren't doing payments as a fully integrated stack, right?
right,
So for a
right.
variety of reasons, it went from whatever it was, 60, 70% to 12. The question is, where is it going to be 5 years from now? Right?
Is it right? Exactly.
What solution if you're like, well, I'm only offering processor agnostic solutions. Okay. What solutions are going to be left for you to offer in 5 years? That's the question.
Right?
So
Maybe
anyway,
one or two.
yeah. So
Yeah,
that's very important. So
that's
yeah.
very important. Okay, two more data points. 78% of providers in the directory offer at least one product, at least one product with a cloud-based hosting model,
Hmm.
and only 5% still support on-premise deployment. That doesn't surprise me.
Wow.
That
So
doesn't,
wait. So only 5% still support having a human coming and doing the installation on
Yep,
site.
yep,
Whew, wow, that's crazy, crazy low number to me. That one actually does surprise me because the reason I say that is like, so here's something that I will say is very interesting. One of these things where it's like, statistics don't lie, but you can lie with statistics.
right,
Let's talk about something, an interesting thing here. In that report, it's very important, I think, to understand, and I think I'm understanding these numbers correctly, that we're saying of all of the POS providers out there, regardless of size, this is the percentage of those companies that does on-site installation, right? Well, think about this. Which companies do provide on-site installation? Well, let's see. Toast, 6,000 installs last quarter,
mm-hmm,
right? So
right,
you think about, okay, but is that a marketing, is that an inevitability of the market, or are POS providers too quickly shifting away from on-site installation when in fact the most successful POS providers are providing that? Now again, it
right.
depends on the vertical, right? For sure. I mean, it depends,
And there's also another caveat. Remember, this is the directory. It doesn't necessarily. I mean, we know that they got all the big shots, but they don't necessarily have every.
yeah, there's a long tail, but this is why that matters, Patty, because even though there's this long tail effect, in my opinion, that would almost make the numbers even more scary because, in other words, if you're an agent or an ISO and you're like, I'm going to go after these processor agnostic solutions, well, here's what you need to understand. Software development is primarily a money game, meaning my
Right,
solution is going to be as good as I can afford to make it with my return on investment, right?
right,
So I'm going
right,
to get more capital if I'm really profitable. I'm going to get less capital if I'm not. Therefore, my solution is going to be really good or it's going to suck depending on the return on capital that I'm able to get. So if you're a processor agnostic solution, you're only making the software money. Now,
Right.
if you're Clover, well, then at scale, you're making billions of dollars off of your SaaS. And even though they're
Hmm.
giving away the payments on most of the deals, not the inside, but the ISO channel, well,
Right.
they can still afford to make an unbelievable solution because it's so big in scale. It's like they make
Right.
one new feature and it impacts a million merchants. So
Right.
they can afford to put a lot of money into a feature, even though they're not getting the payments margin. But
Right.
for these smaller, more vertical specific solutions, the ones who are like, oh yeah, we'll be processor agnostic, just pay us $30 a month per account. Well, that the problem is that $30 a month per account for their tiny little vertical, that's actually not enough revenue to support a robust senior developer team.
Yeah.
Therefore, the solution that you're offering is subpar versus the competition.
Yeah. Sure. No,
So
very
there's that you got to
excellent
think
point.
about too.
Yeah. Excellent point. Yeah. Okay. One last statistic. 43% of providers identified retail and 42% identified restaurants as their key verticals.
Yeah, no surprise there.
That
Yeah,
doesn't surprise me at all. But,
right.
and then basically their bottom line is the POS market will continue to evolve as emerging technologies like AI driven analytics, biometric authentication, and of course, blockchain based payment systems develop.
Yeah, good stuff. Well, Patty, we appreciate you taking the time to put all this stuff together for us and keep us up to date every week. Thank you for all that you do.
I enjoy it. I enjoy it. My friends sometimes they say, why do you write about payments? And I say, because two things. It's the grease that keeps the system running,
Hmm.
the the
Yeah,
commerce running, and it's always changing.
yeah, it is. Absolutely. Well, Patty, thank you very much for all you do.
Sure thing.